Hey everybody, today is April 25th, 2023, and today we're going to talk about the stock market. And I'm talking about the last trading week of April, and whether we should be worried about May. You know, we heard of sell in May, go away, and of course, potential headwinds coming up, right? The Fed meeting next week on the 2nd and the 3rd, and of course, the debt ceiling crisis looming overhead, right? Potential problems coming if we're not able to raise the debt ceiling by the summer to fall of this year. So, before we begin, please read the disclaimer. You can pause this video as you read it. Okay, so last time we left off, we basically talked about how the stock market has basically been ranging between 4,200 and 3,800 for about a year, right? If we stay in this range until going into May, right? This is May of last year when we entered this range, right? We had a, pretty severe correction last year due to the Fed trying to fight inflation, right? And of course, the geopolitical conflicts in Russia and Ukraine. So yeah, basically my whole let's see, my whole thesis for basically this past month is that we're going sideways, and we basically need to break above or below 42 or 300 to determine the next possible potential trend, right? Are we going to break up higher and potentially retest the previous all-time high, or are we going to break below 3,800 and potentially go even lower, right? And I said that there hasn't really been much change since we talked about this, right? The market has been pretty steady around the 4,000 level, right? The S&P 500. And now, of course, we're hitting resistance at 4,200, and the market is starting to pull back. Of course, there are headwinds I just talked about, how the Fed meeting is next week. So we might see some selling into the Fed meeting in case people believe that the rates are going to be increase a lot higher than people expect. Now, I did talk about how I do predict that there's going to be at least another 25 basis points rise, which is what a lot of people are expecting in the next meeting. But I also believe that we could also have another 25 basis point rise in the meeting after next week. So we bring our terminal rate up to just above 5%, right? But I think that the Federal Reserve is probably going to start pausing around that level. I don't think they're necessarily going to cut unless things are really bad in the economy, right? But we already saw like the first sort of crumblings of like things starting to go wrong in the economy, right? Starting to look weak in the economy due to the rate hikes, right? When we saw the regional bank crisis in March of basically last month, right? We saw this pullback. We switch to the SPY ETF, which tracks the S&P 500, and we can see that not only are we trapped between the 42 and 300 in this rectangle that I drew, but also in this Fibonacci line, right? It just perfectly has found support here and here, right? And we are also forming higher lows, right? So I think as long as we are keeping within this kind of intermediate, 6-month ascending triangle, right? If we can defend the low here, I think that all we're seeing right now is, I think, a healthy pullback down to these moving averages over here. You have these nice moving averages, nicely positioned, right? Still bullish, right? 50 above the 100, above the 200 day. We might see a pullback down to the 50 at least before we have a bounce, right? And of course, we have some gaps over here that the market might be looking to fill, right? So I think as long as we hold the 200 day, which is just at 395, I think this is okay, right? Even if we do pull back, we fill these gaps, we have a higher low that's still a healthy pullback, even though we've been going sideways basically for the last year, right? So yeah, just some things to think about. Obviously, we're facing resistance around here. We haven't been able to break above this previous local high, swing high, right? Again, 4,200 is strong resistance, and I don't think we're gonna have a major catalyst until the Fed meeting, like next week, right, on May 2nd and 3rd, and which they not only announce possible interest rate hikes but also their plan going forward, right? And that's also going to be important, not just the interest rate hike, right? Is this going to be the last time we raise interest rates? Because if this is the last time, and they do hint at pausing potentially, that could be bullish. Like the market could go up even though another 225 basis points rise has occurred, right? If they do the 25 basis points rise. Of course, I don't know that yet. But yeah, moving on. Fear and greed is still in greed, but it's starting to go down, right? I think last time we were a little higher, but yeah, I mean, going into next week, generally speaking, what I've noticed is that the market tends to pull back at least a week before the Fed meeting, because there's some people who are maybe they're trying to front run a potential crash, right? And next week is May, and May has traditionally been a relatively weak month, right? Sell in May, go away is of course the cliche, right? So we will see if next month is going to be a bad month. I think that the Fed is going to kick off the month, and we'll see whether the tone they set is going to be a negative catalyst for the month of May. But yeah, generally speaking, May to November is generally, the spring, summer months generally underperforms November to April, right? The fall and winter months generally outperform, historically speaking. But yeah, I think that just on a technical basis, we can see that we're starting to roll over a bit, and I haven't really been talking about these oscillators, but we can look at the oscillators, right? Starting to roll over a bit, you can see how we do have a similar pattern going over the last year, where when we cross here, we tend to pull back, and we're starting to print a negative red candle here, which means the momentum is starting to move to the downside, right? Same thing with RSI, right? RSI, we tend to face resistance when we hit the upper boundary around 65 here, right? We find support somewhere around here, right? The 40 range. So where will that be, right? That could be somewhere maybe down here, 395 or above, right? So if we do pull back, whether it is due to the Fed, whether it's due to the debt ceiling crisis, or whether it is due to earnings being bad. Of course, we have a lot of big tech companies reporting earnings this week, right? Like Amazon, right? That's going to be very important. That they are basically, because a lot of people use Amazon, right? These big tech companies are used by a lot of people, and that's generally a good indicator of whether consumers are spending, right? If the economy is doing well, they're going to be spending. But if things aren't going well, then I think the market could pull back if they do expect that Q2 is not going to be, Q2 is not going to be as good, right? So we might see a pullback down here. I think we will at least defend. Of course, these moving averages I think will be great. It'll be strong support levels, right? Of course, with these gaps as well. But I think the important level to look, at least in the short term, is 395, which is the 200-day moving average, right? Historically has been an important moving average. But also because we've been forming steadily, even though we've been going sideways, we've been forming higher lows, right? Since October market low that we know of, right? Of course, until we are able to break out of this range and retest all-time highs, we don't know if this is the actual low of this bear market, right? Which we set in October of last year. But as long as we're able to defend at least 380, which is, of course, coincidentally, this Fibonacci support level, right? If we do come down and break below the 200-day, we want to at least defend 380, right? That way we can continue to cultivate higher lows. Because if we don't, then we're going to break market structure and potentially, break out of this range that I've been talking about, right? 3,800. So, yeah, that's basically it for today. Oh, I just want to talk about the VIX, right? The VIX, of course, is up a lot today based on what I just talked about. But I think also because the VIX has been going down. Usually, you can see the VIX went down basically 5 weeks in a row. And usually when a VIX goes down this much, there's at least like a dead cat bounce, right? At least a bounce. Even if there's not anything really to worry about, usually there is like a bounce because it gets to a point where there's usually, usually when the VIX gets oversold like this, there's at least like 1 or 2 weeks bounce. So this is not necessarily it's not like unexpected or anything like that. If you could just look at the VIX, generally doesn't just go straight down, right? So this is something I've been expecting for, at least the last 2 weeks was, a strong bounce for at least 1 or 2 weeks. So going into May, where people are, perhaps risking off a little bit because of the, sell in May, go away phenomenon, I'm not really too surprised about that. Dollar index is looking to form a base, right? Again, the dollar index has also been fairly oversold compared to the past, even though we are starting to come down a little bit after going parabolic last year, right? You can see that the dollar index is starting to form a base after falling for basically 5 straight weeks. So whenever even if this is to continue downward, right? Usually it doesn't go down in a straight line. It usually finds a level of support, bounces around before it goes down level. Not saying that it'll continue to go down, but like usually even if it does go down, it tends to bounce around for a while. It doesn't just go straight down. So what we're seeing here is not necessarily anything surprising. Of course, next week there's going to be a strong catalyst, right? The Fed, potential catalyst, the Fed. On the 2nd and 3rd, they're gonna meet and they're going to discuss whether they want to raise interest rates another 25 basis points or more, right? So I think at this point the general consensus is 25 basis points, but we will see. And of course, I'll update you next week and talk about the Fed's decision and any other news that comes out that could shift the market. But yeah, it'll be very interesting to see how the market reacts going into May. There's a lot of things to talk about and a lot of things that can affect the trajectory of the market going forward. So thank you for watching this video. If you found it useful, helpful, or informative, please like this video, leave a comment below, and subscribe for updates. I appreciate your support. Thank you again, and have a great day.